Warren Buffett suddenly has a very concentrated portfolio with one stock accounting for over 50% of the stocks in Berkshire Hathaway as of the end of the fourth quarter. That stock, I'm not going to bury the lead here, is Apple. And what's interesting about Buffett's ownership of Apple is not just that he owns the stock, it's the lessons that we can learn from when he bought it and why he has held it until now. Because it really goes to the long-term investing mindset that Buffett has really played a massive role in a lot of investors instituting, and the kind of mindset that we want to have here at Asymmetric Investing. He bought a stock at a very reasonable valuation and has simply held on. It is now a multi-bagger for Warren Buffett and for Berkshire Hathaway. And to generate a multi-bagger, you got to let it double. You got to let it triple, quadruple. You have to let compounding do the work for you. And that is exactly what Buffett has done with Apple. So I want to dig through the purchase and how this has played a role in the company's portfolio over the last few years, because now $174 billion worth of Apple stock, just a massive win from a single stock pick. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go through the portfolio in detail and what we learned from the most recent SEC filing. This is a chart of the portfolio and the holdings from FinChat, and you can see that $344.9 billion worth of market value. The top 10 of those positions account for a whopping 92.9% of the overall value, and over 50% of that is Apple. And I think it's really interesting that Apple is really the only tech stock in here. You go down, you have financial institutions like Bank of America, American Express, energy companies like Chevron, Occidental. Those are the kind of companies that he's been adding to, actually added to both of those in the most recent quarter. And then old companies that Buffett has owned forever, like Coca-Cola, Moody's, just the old Buffett stalwarts. But let's dig into this Apple position a little bit more. This is a look at the history of Buffett's Apple position, and you can see that the acquisition actually started in 2016. Q1 2016 is the first time that it shows up in these filings, and you can see that it was a relatively small position, about 1% of the portfolio for about a year. That jumped up to a little over 10% of the portfolio in 2017, and then most of the gains since then are really just associated with appreciation of Apple's stock. The jump in share count in 2020 was actually a stock split from Apple. So that was just simply the number of shares increasing, but same economic stake in Apple as a company. And through compounding, this position goes from about a 10% position in Berkshire Hathaway's portfolio to about a 50% position. That's not including the dividends that have been paid along the way. So this is allowing investments to work for you. This is allowing compounding to be your friend. Charlie Munger talked about this, not interrupting compounding unnecessarily. But the other thing that I think is interesting to look at with Apple in particular is what Buffett was actually buying in 2016, because then Apple was a very different company than it is today. This is a chart of Apple's revenue and free cash flow from 2014 to fiscal 2018. You can see relatively modest growth rate in the single digits. So not a massive growth company, but very profitable, generating a ton of free cash flow. Apple also had a very strong balance sheet at this period of time. You can see that the cash balance was growing. Now, there was debt on the balance sheet, and that's in part because Apple started buying back stock, was keeping the debt, it was keeping cash that was held overseas, was just leaving that overseas, and was taking out debt in the US at relatively low interest rates. And they started to pay dividends, buy back stock at a pretty rapid rate. But what I think really differentiates Buffett's buy of Apple from a lot of other companies and a lot of way that investors are looking at technology stocks today is what he was actually paying for the company and the stock at that period of time. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at Apple's market cap. So if you go back to early 2026, the market cap was about $500 billion. But the stock was trading for a price to earnings multiple in early 2016 of just 11, 10.5, 11 as Buffett was buying shares. You go into 2017 and the price to earnings multiple starts to go up to about 14. But these are very different numbers than what we're seeing from Apple today. Right now, shares of Apple trade near 30 times earnings. So about double from a multiple perspective from what Buffett was paying back in 2016 and 2017. At the same time, Apple's growth rate has slowed. So this was, yes, it was a single digit growth rate company back then, but there was opportunities to do things like raise prices, move into adjacent products and services. Those are the things that have grown a lot over the last decade or so. So there's a lot more growth potential than there is today at the current price that you're paying for Apple. So Buffett wasn't only buying a great company, he was buying a great company at a great price, or a fair price is the way that they would probably say it. He has talked about this in the past. Buying a great company at a fair price is better than buying a fair company at a great price. And that's exactly what he got with Apple. It was probably a little bit of both, great company and a great price. But here's the other thing that Buffett didn't do. And this is what I'm trying to learn from as an investor and improve from in my own investing, is he didn't sell shares of Apple. He let the company grow and mature to the company that it is today, let that multiple expand. And only recently, in the most recent quarter, he sold about 1% of the position. So very possible that Buffett is looking to sell a little bit of Apple position in 2024. But this, like I said, this is a very different company at a very different price today than it was in 2016 when this purchase happened. So what has happened over the last 8 years is that Buffett bought a company that was growing, increasing revenue, increasing cash flow, allowed that company to compound over a period of time, and got tailwinds from multiple expansions. So when you're buying a stock at 10, 11, 12, 13 times earnings, and you allow that multiple to expand to 25, 30, 35 times earnings, that's a doubling or a tripling of the stock just simply from multiple expansion. You add to that the increase in earnings, and now suddenly you have not only a multi-bagger, but the kind of stock that can 10x over a decade. And that's exactly what I'm looking for here on asymmetric investing. So not only important to buy great companies, but also important to buy them at a great price. Always a great reminder from Buffett. And he has exemplified that in Apple, which is now suddenly an incredible 50% of his equity portfolio. Not 50% of the portfolio overall, because he owns a lot of private businesses as well. But where he has really made his name is in public markets, and just simply one stock purchase in 2016 and 2017. And having high conviction in that, letting it compound over time, has now resulted in well over $100 billion worth of gains. So I think this is just a fascinating stock to learn from one of the best investors of all time, one that was staring us all right in the face. Maybe you owned it, maybe you didn't, but either way, I think a lot that we can learn from Buffett and how temperament and your frameworks in investing can really impact your long-term gains. But what do you think about Buffett's purchase of Apple and what's happened to that stock over the last 8 to 10 years? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.